Hey everyone, welcome back. We're diving deep today into DCM Shriram Ltd's Q2 FY25 performance.
We've got a whole stack of company files here, unaudited financials, investor
Yeah,
presentations.
the whole 9 yards.
It's like getting a sneak peek behind the scenes.
Exactly. So we're going to unpack all of that, not just look at the numbers, but figure out what's really going on with their strategy.
Yeah, and maybe even get a glimpse of where they're headed in the future.
All right, so let's start with the big picture, those headline numbers. DCM Shriram saw a 9% year-over-year revenue increase.
Impressive.
Yeah.
Yeah.
And a 95% jump in profit after tax for Q2.
Wow.
Yeah. For the first half of the year, revenue's up 6%, and profit after tax is up a crazy 84%.
Those are some big jumps.
They also declared a 100% interim dividend.
You might want to double check your math on that one.
Definitely a good sign, right?
Yeah, it shows the management team is feeling pretty confident.
But, DCM Shriram is a pretty diverse company. They're in chemicals, they're in agribusiness.
Even those building systems you see popping up everywhere.
Exactly. So to really understand these results, we need to break it down by segment.
See what's really driving the performance in each area.
All right, let's zoom in on the chemicals business first.
He's good.
The segment's killing it. 19% revenue growth in Q2.
And their profit.
Yeah, more than tripled.
That's huge.
But here's where things get really interesting globally. Caustic soda prices are holding steady.
Okay.
But in India, there's an oversupply, which is pushing down domestic prices.
So how are they managing to do so well?
That's the million-dollar question, right?
Right.
Well, their new 120 million power plant is a big part of it.
Ah, that makes sense.
It's like trading in an old gas guzzler for a Tesla.
Much more efficient.
Exactly. Way more efficient, lower energy costs. And remember that 20 crore rupee incentive they got from the Gujarat government.
Oh, yeah. What was that about again?
It's actually for projects going all the way back to 2017.
Wow, they're playing the long game.
Yeah, talk about delayed gratification. It shows how their strategic decisions are paying off years later. And that's not all they've got going on in the chemical segment. They've also got a new hydrogen peroxide plant
Huh?
and an ECH plant in the works.
Keeping busy.
But wait, there's more. They're investing 310 crore rupees in aluminum chloride and calcium chloride facilities.
Sounds like they're going all in on chlorine.
They are. It's a smart move to lock in their chlorine supply and ride the wave of growing demand.
Makes sense.
Okay, now let's turn to their vinyl business. This is where the story takes a bit of a turn.
Oh.
Yeah, they saw an 8% revenue dip for the quarter.
Why is that?
It seems like the global housing slowdown is hitting PVC demand.
That'll do it.
Plus, they're facing some tough competition from China, which has been flooding the Indian market with surplus PVC.
Not exactly ideal.
Not at all. So the big question is, how resilient is their vinyl business in the face of all this?
Right. Are they able to weather the storm?
Well, despite those headwinds, their profits actually increased, mainly because of lower energy and carbon costs.
Okay, so they're managing.
They also got a 16 crore rupee benefit from an electricity duty reversal.
Interesting.
So even though it's a tough market out there, they're finding ways to stay afloat and even make some gains.
Okay, let's move on to sugar and ethanol. Always an interesting sector.
Definitely a roller coaster ride.
So what happened there?
Revenue was up slightly,
Yeah.
but profitability took a hit. Actually went negative for the quarter.
Oh, wow. What's going on there?
Basically, it comes down to rising production costs that haven't yet been reflected in sugar prices.
Okay.
Plus, India has a massive sugar surplus right now, which is leading to calls for export allowances.
I see.
And on top of that, government policies on ethanol are having a direct impact on DCM Shriram's plans.
How so?
Well, they've removed restrictions on using cane juice and B-heavy molasses for ethanol production.
Ah, so that adds another layer of complexity.
Exactly. They're grappling with a lot of external forces, but they're also making their own strategic moves.
Like what?
Well, for instance, they're shifting away from C-heavy molasses for ethanol.
And that's why ethanol volumes are down.
Exactly. It looks like you're taking a long-term approach, even if it means making some short-term adjustments.
Makes sense. All right, let's switch gears and look at Fenesta Building Systems.
Okay. They're building a pretty solid foundation for success over there.
Pun intended.
Maybe. 6% revenue growth and good profitability.
What's their secret?
They're investing heavily in new revenue platforms and ramping up their capacity.
Even though it's putting a bit of pressure on their margins?
Right. They're playing the long game, focusing on the future. And their growing order book suggests that this strategy is working.
It's all about delayed gratification, right?
Exactly. Short-term pain for long-term gain.
Okay, before we wrap up this overview of the segments, what about their other businesses?
Oh, yeah, we can't forget about those. Shriram Farm Solutions is doing fantastic. Fertilizer is holding steady.
And buyer seed.
Bioseed is seeing some impressive growth.
So they've got quite the diverse portfolio.
They do, and that diversity is one of their biggest strengths. It allows them to weather storms in one area while other segments keep thriving.
That's a smart strategy.
It's all part of their bigger plan,
Yeah.
bolstering their existing businesses, finding those lucrative value chain opportunities, and staying focused on sustainability.
Speaking of sustainability, they're putting their money where their mouth is, investing in renewable energy for their Coda complex and adding a smaller installation at Farouche.
Yeah, they're not just talking the talk, they're walking the walk.
That's important these days.
It is consumers and investors are demanding sustainable practices.
It's not just good for the planet, it's good for business.
Exactly. So we've covered a lot of ground here. DCM Shriram is a fascinating company with a lot going on.
How?
But what does it all mean for you? What are the key takeaways from all these numbers and strategies?
That's the question we're going to try to answer next.
Let's dig into that in the next part.
Sounds good.
Okay, so we've seen how DCM Shriram's businesses are doing, but let's take a closer look at their financials.
Yeah, the numbers can tell us a lot.
Where should we start?
Let's look at their consolidated balance sheet. It's basically a snapshot of their financial health.
Okay, what jumps out at you?
Well, their total assets are pretty healthy, sitting at over 12,100 crore rupees.
12,100.75 crore, to be exact, as of September 30, 2024. And that's up from March 31st.
Right, those investments we talked about are definitely adding to their assets.
So those new projects and expansions are showing up here.
Exactly. Now let's look at the other side of the coin. Their liabilities, what they owe.
Okay.
Their total liabilities are about 5,458 crore rupees, also a bit higher than last period. But the key here is not just the total amount, it's the type of debt.
Right. It's about the mix short-term versus long-term.
Yeah, exactly. That gives us a better sense of their financial risk.
So how does DCM Shriram's debt breakdown look?
Their long-term borrowings are around 1,431 crore rupees, and their short-term borrowings are about 703 crore.
Those numbers seem pretty manageable, especially when you consider their cash on hand.
Ah, yes, their cash and cash equivalents. Over 11,125 crore rupees.
It's like having a nice cushion in your bank account.
Exactly. It gives them flexibility to handle short-term obligations and also fuel those new investments.
So they're not strapped for cash.
Not at all. But let's move beyond the balance sheet and look at their cash flow statement. This shows us the actual movement of money.
Where it's coming from and where it's going.
Right, like tracking the flow of a river.
So what's their cash flow looking like?
Their cash flow from operations is strong. Over 1,735 crore rupees for the first half of the year.
It's a good sign, right?
It means their core businesses are generating a lot of cash.
The lifeblood of any company.
Exactly. Now, the question is, where are they channeling all this cash?
Well, if we look at their cash flow from investing activities, the picture becomes pretty clear.
They're putting a lot into capital expenditures.
Those upgrades we talked about earlier.
Exactly. Over 503 crore in just 6 months.
Wow, so they're not just talking about growth. They're putting their money where their mouth is.
It's like a gardener carefully tending to their plants.
Making sure everything is growing properly.
Right. But these big investments can sometimes put a strain on a company's resources. So let's look at their financing activities, how they're managing debt and rewarding shareholders.
It's all about finding that balance.
Right. Interestingly, their cash flow from financing activities shows a net outflow.
What does that mean?
It means they're paying down more debt than they're taking on, and they're also keeping up with those dividend payments.
So they're reducing their debt burden while also giving back to investors.
It's a smart strategy, especially in these uncertain economic times.
Yeah, they're not overextending themselves.
Right. They're managing their debt carefully and keeping investors happy.
So their financials are painting a pretty positive picture, wouldn't you say?
I would say so. Strong cash flow, strategic investments, a healthy balance sheet.
But numbers only tell part of the story, right?
That's true. To really understand their performance, we need to consider the bigger picture, the context.
Those external factors that can influence a company's trajectory.
Right. Their investor presentation gives us some insights into the global economic landscape, government policies, and industry dynamics.
It's about connecting the dots between their financial performance and the world around them.
Exactly.
So let's take the chemicals business as an example. We know the global caustic soda market is pretty balanced, but India's oversupply is pushing down domestic prices. How is DCM Shriram handling this?
They're not just going with the flow, they're leveraging the cost advantages. That new power plant is key.
Right, minimizing those energy expenses.
Plus, they're benefiting from those government incentives and the location of their facilities.
Sounds like they're masters of efficiency.
They're definitely making the most of their resources.
Okay, now what about sugar and ethanol? It's a volatile market affected by government policies, global prices, even the weather. How are they managing all that uncertainty?
They're adapting their production strategy, optimizing ethanol output based on regulations and market demands.
So they're staying flexible.
And they're not just accepting the status quo. They're actually advocating for policy changes that could benefit the entire industry.
Like pushing for those sugar export allowances.
Exactly. They're not just playing the game, they're trying to change the rules.
Okay, now let's look at their building systems business.
Okay?
A market with huge potential, but also lots of competition. How are they standing out?
They're not just building structures, they're building a brand.
Okay.
They're investing in new revenue streams, expanding capacity, and focusing on a great customer experience.
Sounds like a recipe for success.
It is. And their growing order book shows it's working.
What about sustainability? We talked about their commitment to it. Are they walking the talk?
They're not just dipping their toes in the water, they're diving right in, investing in renewable energy, reducing their carbon footprint, integrating sustainable practices throughout their operations.
So they're serious about it.
They understand that sustainability is not just good for the planet, but also essential for a successful business.
Okay, but we can't ignore the bigger picture, the macroeconomic environment. The world is a pretty complex place right now. How are those global trends impacting DCM Shriram?
It's like navigating a ship through choppy waters. You know, India's economy is doing better than many others, but those geopolitical tensions, supply chain issues, and inflation are creating challenges.
So they have to be careful.
Exactly. It's a test of their agility and foresight.
So they have a lot on their plate, but they seem to be handling it well.
They are. They're delivering strong results, making smart investments, and adapting to the market.
But as with any journey, there are always potential bumps in the road.
You're right. Let's talk about those risks they need to be mindful of. Understanding the challenges is just as important as celebrating the successes.
It's like planning a road trip. You map out your route, but you also need to know about potential traffic jams, detours, weather conditions.
Exactly. So let's explore those potential risks and see how prepared DCM Shriram is to handle them.
All right, so we've seen all the good stuff, but let's talk about the not so good stuff. What are some of the risks DCM Shriram needs to watch out for?
Well, that global economic slowdown is definitely one to keep an eye on. You know, India's economy is doing okay relatively, but a prolonged downturn could really hurt demand.
Especially for their products that are exported.
Exactly, like chemicals and vinyl. It's like a domino effect. What happens globally can impact even companies that are mostly focused on the domestic market.
So even though they're rooted in India, they're not immune to those global headwinds.
Right.
What about competition? We talked about that Chinese dumping in the PVC market. Are there other competitive threats out there?
Oh, competition is always there. It's like a shadow constantly pushing you to be better.
Yeah.
In chemicals, they're facing competition from both Indian and foreign companies.
So everyone wants a piece of the pie.
Exactly. They need to stay on top of their costs, make their products stand out, and make sure they have access to raw materials.
It's a constant race. Okay. We've also seen how government policies can really shake things up, like those ethanol regulations in the sugar business. Are there other regulatory changes that could cause problems?
Yeah, government policies can be unpredictable. Sometimes they create opportunities, but sometimes they create challenges.
Right.
Changes to import-export rules, environmental standards, taxes, all of those could impact their bottom line and their plans for growth.
So they need to be adaptable.
Absolutely.
What about internal risks? Are there any operational or management issues that could cause problems?
Well, every company faces internal risks no matter how well run.
Sure.
For DCM Shriram, they need to stay focused on efficiency, keeping costs down, and processes streamlined.
Makes sense.
Safety is obviously crucial, and strong corporate governance is important to maintain trust and transparency.
Right.
And of course, they need to attract and keep talented people, the people who can drive the company forward.
So it's about having the right people, processes, and culture. Okay, we've talked a lot about sustainability, but are there any risks or criticisms they might face in that area? You know, expectations are always rising.
You're right. The bar is constantly getting higher. They need to keep improving their environmental and social performance.
So it's not enough to just make progress. They need to show that progress to the world.
Exactly.
Yeah.
They need to be transparent, accountable, engage with stakeholders, address any concerns that come up.
So walking the walk and proving they're serious about making a positive impact.
Right.
Considering all these risks, internal and external, how would you say they're doing overall? Are they ready for whatever comes their way?
Well, based on what we've seen, they seem to be well managed with a good track record.
Right.
They've got that diverse portfolio, the strong financials we talked about, and a proactive approach to managing risk.
They're not just crossing their fingers and hoping for the best.
No, they're identifying potential problems and putting plans in place to deal with them.
That's good to hear. But risk is always part of doing business right. So what can they do to be even more resilient and prepared for the future?
Well, first, they need to stay informed about what's happening in the economy, both globally and in India. It's about anticipating those challenges and adjusting their strategy.
So being flexible.
Exactly.
Yeah.
Like a captain navigating a ship through rough waters.
Okay, what else?
Building strong relationships is crucial with suppliers, customers, regulators. It's about trust collaboration, open communication.
Relationships are key in any business.
They are. And innovation is also essential. Investing in R&D, finding new and better ways of doing things.
Staying ahead of the curve.
Right. And sustainability is not just a trend. It's a fundamental change in how businesses operate. DCM Shriram needs to keep making sustainability a core part of everything they do.
So it's more than just checking boxes. It's about making it part of their DNA.
Exactly.
Well, I think we've really covered a lot in this deep dive. We've gone beyond the surface and explored DCM Shriram's performance, their strategy, the risks, and the opportunities.
We have.
What's the one big takeaway you want our listeners to remember?
That DCM Shriram is a company on the move. They're not afraid of change. They're getting great results, making smart investments, and they're set up for a good future.
A company to watch.
Definitely.
And for those investors out there, they seem like a good option.
Yeah, they offer a lot of potential solid value and a real commitment to sustainability.
Hey, what a combination.
It is. They're proof that diversification, innovation, and dedication to excellence can really pay off.
Well, on that note, I think we've reached the end of our deep dive. It's been a fascinating look at DCM Shriram.
It has.
But remember, this is just the beginning. We encourage you to keep learning, keep exploring, and come to your own conclusions.
Use what you've learned, stay curious, and keep asking questions.
Until next time.